Hi, thanks for taking the time to look at this video presentation concerning dentists who are paid as independent contractors. My name is Sergio Estavio. I'm an enrolled agent. If you're not familiar with enrolled agents are licensed by the U.S. Department of Treasury to practice before the IRS concerning tax matters. So in terms of tax preparation, tax advisement, things of that nature, I'm capable of doing that with this license. Some of you may also know me as the Director of Financial Aid for the Ostrow School of Dentistry. So hopefully this will be a brief discussion and introduction as to your responsibilities from a tax perspective if you're paid as an independent contractor. Just a couple of assumptions that I'll make is that you did not have a federal tax liability for the calendar year 2012. Essentially what that means is that you didn't work during 2012, and as a result you weren't required to file a tax return. If you did work in 2012, did file a tax return, had a liability or paid taxes for that calendar year, then the assumptions that I describe in this presentation don't apply. Kind of the bottom line is that you are expected to pay estimated taxes during the course of 2013. But if you have questions about that issue, feel free to contact me so we can go into detail about your specific situation. Also, I'm assuming that you began practicing in September 2013. I guess another underlying assumption is here that you graduated sometime in 2013. It took a little while before you got your license. Then you began practicing towards the end of the 2013 calendar year. So just kind of a general overview concerning dentists who are paid as independent contractors. As such, there are no withholdings from certain types of income and self-employment taxes, and they're listed there. Federal income tax, state income tax, assuming that your state does have a state income tax. California does. Two notable states that do not are Texas and Nevada. Social Security and Medicare. With respect to Social Security and Medicare, the tax rate is up to 15.3% for the first $113,700. Then anything above that is then taxed at a rate of 2.9%. This is kind of compared to someone who's employed as an employee of a practice as opposed to independent contractor. Normally, if you're an employee of a practice, or say you're practicing in a more corporate environment, you're practicing with Pacific Dental Services, Western Dental, Bright Now, Gentle Dental, some of those types of entities, you're usually considered an employee, and as an employee they withhold those taxes, the federal income tax, the state income tax, Social Security, Medicare, and they pay that on your behalf to those respective agencies. So you do have withholdings. Compared to an independent contractor, you have no withholdings. Your gross check equals your net check. So the concern here is that you're expected to save between 20 and 30% of whatever you make in 2013 in anticipation of your tax liability that's going to be due as a result of no withholdings. So come April 15th, 2014, you may have a significant tax liability associated with those four items: federal income tax, state income tax, Social Security, Medicare. So this is just to give you a sense of what to be prepared for come April 15th, 2014. A quick overview of the timetable. So for the calendar year 2013, you're expected to pay taxes on April 15, 2014 associated with federal and state income tax, as well as Social Security and Medicare. And going forward, for those dentists who are paid as independent contractor, the IRS doesn't want to wait a year before it collects taxes, so you're expected to start making estimated payments after your first year. So beginning in 2014, you'll make quarterly estimated taxes beginning on April 15, 2014. So on April 15, 2014, you have to be concerned with two items: your tax liability associated with the calendar year 2013, as well as begin payment for your tax liability for the calendar year 2014. So the first estimated payment would be on April 15th of 2014, then on June 15th, September 15th, then the final estimated payment for the calendar year 2014 would be January 15th of 2015. So unfortunately, April 15th of this 2014, you need to be prepared for it. So that's why I developed this presentation. To give you a better sense of what you need in terms of a financial obligation, I'm just going to go through this hypothetical example. First, I'll identify the taxpayer's profile. So the filing status is single. This individual does not have any dependents, so the exemption is 1. And at this point, this individual uses standard deductions, and I'm assuming for 2013, this individual has gross income, or let's say they're paid as an independent contractor, and their gross income, all their 1099s which they'll receive in January, total up to about $50,000. In addition to that, this individual has business-related expenses that they can deduct from their gross income, and I'm assuming here that they can deduct about $7,500 in business-related expenses. Some things that are typical of dentists would be, dental equipment depreciation, dental supplies and materials, CE courses, malpractice insurance, association dues, your licensing exam, and some other fees related to you securing your license in 2013. So some of these items can be deducted from your gross income to arrive at your business net profit. And this is kind of important. And to give you a better sense of how this is all related, let me go ahead and show you quickly the first 2 pages of your federal tax returns, as well as Schedule C, which is used to capture your business income and expenses. The reason I'm referring to business income and expenses is because as an independent contractor, you are considered a sole proprietor, and as such, you're expected to complete Schedule C of the federal income tax return. Schedule C is profit and loss from a business. So I'll go over that in just a second. So here what we have is the first 2 pages of the federal income tax return. So just information you complete here, your filing status, I'm assuming single. Your exemptions are limited to just yourself, and these are the types of income that they capture. In this example, I'm assuming only line item number 12, business income or loss. So this is captured by completing Schedule C, and I'll go over Schedule C in just a second. Say you're employed by 2 different practices. In one practice, you're considered an independent contractor, and the other one, you're considered an employee of the practice. So what would happen is that you would, in that situation, complete line item 12 with respect to your independent contractor status, and line item number 7. as an employee of a practice. So in some situations that'll be the case. But these are the types of income that's captured by the tax return. And again, I'm assuming that you're only an independent contractor, and as such, you're looking at line item number 12. So the second page, the first two pages of the federal tax return. Then Schedule C, as I mentioned, it captures profit or loss from a business, a sole proprietorship. As an independent contractor, you're a sole proprietorship. Your gross income is captured here, and I'm assuming line items number 1 and number 7 are going to be the same. Let's say $50,000. Then Part 2, you're deducting your expenses. So the total of these expenses on line item number 28 amounts to $7,500. So your net profit on line item number 3, then 31, becomes $50,000 minus $7,500, totaling $42,500. This line item number 31 is then captured back on the first page of the federal tax return on line item number 12. So again, that would be $42,500. Just to give you kind of a brief sense of what you're completing with respect to the federal income tax returns. So let's go into some numbers. And this is what you need to get a sense of what your obligation will be come April 15th, 2014. So your estimated tax liabilities. Gross income as an independent contractor is $50,000. When you complete, and this is completing kind of Schedule C, less your business expenses of $7,500, has a total net profit or total income of $42,500. Then some federal tax items. You're allowed to deduct your self-employment tax, which is $3,000 approximately. So your adjusted gross income is $39,500. This is key if you're in IBR or pay-as-you-earn, because this is the number they'll use to determine your payments under both those programs. From here, you're allowed to subtract out a standard deduction. Again, for a single filer, you're looking at $6,100, and one exemption, in this case $3,900. So your total taxable income is about $29,500. And this is what the federal government uses to determine your federal income tax liability as well as your state income tax liability. So your federal income tax liability associated with this income amounts to about $4,000. The state of California then is about $1,400. Then also Social Security and Medicare come in and say that you owe about $6,000 for those two programs. So come April 15th, 2014, then you're expected to pay $11,390 based on this information. In addition to that, you're expected to make a first estimated payment for the calendar year 2014. And your first estimated payment would be based on the previous year's tax liabilities for the feds and the state. So the expectation is that that might be about a little over $1,000 come April 15, 2014, in addition to the $11,390 that you currently have for the 2013 year. A brief presentation. Feel free to give me a call. That's my number, as well as my information. If you have any tax questions or concerns, or if you have any questions concerning pay-as-you-earn, IBR, I appreciate your time, and I look forward to speaking to you. Thank you very much.